Hello everyone, welcome to a new episode of Global Investment Journal. My name is Andy Wong. Today we will be sharing our analysis of one of our favorites, Lynas Rare Earths from Australia. Before we start, please like and subscribe our video and YouTube channel for more content. We share our insights on global multi-asset management through our English videos bi-weekly. So why do we love Lynas? First off, let's talk about some fundamentals of this company and what they do. Lynas is a rare earths producer that supplies both light rare earth elements and heavy rare earth elements, a total group of 17 crucial to the manufacturing of many electronic products. We have to bear in mind that rare earth materials are not called rare because they have a low supply. There are actually plenty of supply in our Earth's crust. They are called rare earths because it is very hard to find these materials in their pure form. It requires specific geological conditions to enable economic extraction. Rare earth elements generally have higher melting points and boiling points, and mostly with strong magnetic properties, hence why they are very applicable in today's technology. Below is a part of the periodic table that shows the rare earth elements. We have attached a picture of Lynas chart of rare earth applications, and you can see the list of metals they produce. This chart of elements are used as catalysts, glass, metal alloys, electronics, porcelain, and magnets. If you look at their functions, it is not only EV that these metals contribute to, but also new energy and technology hardware industries. There are a few elements that we should keep an eye on, such as cerium, praseodymium, and neodymium, because they contribute to the EV industry, which is one of the industries that our firm keeps an eye on. They are also Lynas' main products. Lynas is more of an upstream company focused on mining and processing. Their mining site is located in Australia called Mount Weld, where they mine and also do some preliminary crunching. Then these materials are moved to their processing plants in Malaysia for refining into pure rare earth materials, which could then be sold to customers. In February this year, the U.S. Department of Defense granted Lynas to build a Texas facility to process specialized minerals used to make weapons, electronics, and other goods. So in total, Lynas has 3 major sites. The US project is also a crucial part to Lynas' business because firstly, its biggest mission is to diversify the rare earth supply chain from China's monopoly, and secondly, it is diversifying its customer groups. More importantly, we should look at the industries that Lynas contribute towards to and could potentially ride on their growth. For EVs, a lot of rare earth materials are applied to the body of EVs, such as cerium in glass and mirrors, neodymium and praseodymium in the electric motor, and lanthanum in catalytic converters. For wind energy, neodymium, praseodymium, and dysprosium are used in wind turbines. For the IoT industry and the global smartphone markets, lanthanum and cerium are highly applied in electronics like LEDs and fiber optics, which are also crucial for hot inventions like 5G. When we look at stocks, we find it is useful to assess the whole supply chain of futuristic firms such as smart grid technologies and EVs. From looking at the supply chain, we can find upstream companies that benefit from these megatrends such as Lynas. Speaking of megatrends, Lynas contributes towards renewables, e-mobility, and defense and space. These are also trends that are digitalizing. These all sound very sustainability friendly. However, we must be aware that it is a mining company, so how does it try to stay sustainable? There are new technologies in Lynas that attempt to maximize the efficiency of materials. As we said above, these rare earths are being transported from Australia to Malaysia and then to customers. Within the production chain, these rare earths are processed into ores, concentrate, oxide, a lot of different forms. So we expect some improvements in technology that would enable this business to be more sustainable and efficient. Another thing, if you look at this photo where there are red and green lines of supply risk, we can see that rare earths have the highest supply risk, meaning that the rare earths company may have more power in controlling the supply chain of these technology trends. Lynas, as the largest rare earth supplier outside of China, is supposed to have power in the supply chains. This is also one of the main factors as to why we like Lynas. To show some statistics, the 6-month cumulative total return is 39% and the forecast PE ratio is 39.74. We can say Lynas is at an undervalued level right now since the price surged over the past month. We have organized a bar chart on Lynas revenue. You can see that it has recovered from the decline during COVID. Along with the technical analysis, we attached a 10-year weekly graph of Lynas. In our analysis listed in March, we have mentioned that the stock will bail out from correction at around 0.236 of Fibonacci ratio. The rally has continued and reached the 0.382 recently. Let's now talk about the factor model. Lynas factor model shows a very strong technical analysis, growth momentum, and quality for mid to long-term growth. Therefore, we maintain our previous positive rating on the stock. Thanks for watching, and please don't forget to click the like button if you are enjoyed our analysis on this commodity related stock. If there are any companies you'd like us to look through or translate from our previous video, feel free to comment down below. We will see you at our next sharing.